our life cost. Acquiring customers the traditional way always entail a variable cost and fixed cost. And practically our colleagues who sit at, if you think about the traditional banking, who sit at the branches, they prefer to spend their time with a customer who gonna deposit tens of thousands of pounds rather than a customer who will have or she will have an account that clears with very small savings there. The profitability from the account does not cover the cost of account maintenance. So banks generally and historically, they ignore the small customers until the devices, which is the mobile, shown up. Now we have a golden opportunity for inclusion, but we have to change the way we conduct business. The idea of customer coming to us and signing papers, filling forms, visiting the branch is history. And if we are serious about financial inclusion, and financial services and financial inclusion is not a gift. It's the right of each citizen is to have financial service. Then we have to provide it in a cost-efficient way through devices, which is mobile, remotely without making the effort to move to a branch. In other words, we need to stay away from the paper and pen push. I hope that summarize the key issue about inclusion when it comes to banking. Devices are the solution for financial inclusion, which is the right for each citizen.
And Hisham, can I get you to continue with that theme a little in terms of some of the success stories that you've had at CIB, and in particular where in moving from branches to devices, that's been such an empowering point in reaching people in rural communities, for instance?
Yeah, I mean, before the COVID-19, we are requested by the regulator that customers have to sign forms. They have to fill forms. They have to come. We have to see them. We have to see their national identity. Someone have to sign next to the form that the customer signed, and they have seen the customer. That's impossible under the COVID-19, really. So they eased the regulation, and I hope that will be permanent rather than temporary, to open digital accounts. It's like mobile wallets and enrolling, what you call it, an internet banking or mobile banking. It's amazing how, I'm not talking here about the millennial generation or young people. Generally, people want a simple way to interact with the bank, a simple way that they feel safe by paying money and getting their money. And I can tell you that the financial transactions doubled up in the last 6 months. Just the number of transactions, either corporates or individuals. And the number is increasing. The acquisition of active mobile wallets is increasing way faster than what we expected. And if the regulator keep the inclusion or providing financial services without the paper and pen push for certain segments, small accounts and remote customers, I think this will be the breakthrough for financial inclusion, because the idea here is not about just payments. Payments will lead to behavior. I can talk about this further. People who receive money and spend money, we depend on their data to start to provide them with other services. That's how we start to make the accounts profitable, and we start to provide better service for that segment. Not all the customers are the same, but I can tell you, I'm really impressed by people who different from blue collar to white collar to people who never had bank account. They started to use the wallet and the remote connectivity in order to onboard into our, because the wallet makes you a bank customer, but remotely. By having their history there at the bank, in few months' time, we'll start to provide them with other services. Those services could be insurance. I want to add one point about the digital identity before I move to that point. It's not only about the personal data, it's about personal behavior as well. It's like 360 degrees holistic look at the individual that becomes very hard, even if people have the same birthday, almost the same name, to mix them up because of the different behavior. The most trusted place where you can have the entire data, I think the banking sector, is where historically, and I think in the future, would be the right place where they can preserve the customer secrecy and the customer data. Moving to how to use the data there, either individuals or small businesses, the biggest challenge that private small businesses have is that when they deal with banks, they deal with banks who don't understand very much how the small business run their operation. And fortunately, their off-takers or suppliers, they know them better than their bankers. The banker have all the information about them, but their behavior is much better understood by the supplier and the off-taker. So I think moving the credit part of financing SMEs from just a cash flow and projection to payment and behavior is very important, because this is exactly how suppliers give facility to their small businesses, or off-takers give them advances for their business. And unless banks move their business lending model from the traditional corporate lending to a behavior lending, as if I'm a small business, even if the cost is higher, I would rather prefer to get my financing from my supplier or off-taker who we have been dealing together for many years, rather than borrowing from banks. It's quite complicated, the SME financing. From our side at CIB, when we looked at SME, we looked at what's missing there is the financial services, payment, payrolls, because most of the SMEs, the majority of their business is in cash. So the first step is to understand their behavior, is moving that cash into the bank, like the point of sales. Rather than selling cash, you sell through point of sale. Rather than paying your employees in cash, you pay them through the wallet to their straight to their account. Then we build information, and this is what we call it an SME, the identity. It's another behavior identity for that small business, the same like